Okay, and kind of the final major thing for this chapter we're going to look at is an income statement. So an income statement, go back to my vocabulary sheet here that I had. I'd mentioned an income statement before. I said an income statement shows revenues minus expenses for a given period of time. Revenue, remember, is all the money earned in the course of business. And we generally find a revenue in a manufacturing firm by the unit price times how many units are sold. So make sure and keep clear the difference between what our revenue is versus what our expenses are. Expenses are money going out, and revenues is money coming in. So we're going to look at this exercise from the chapter. It says, recall that Blue Denim Company sold 99,000 pairs of jeans during the month of May at a cost of $495,000. Each pair sold at a price of $8. Blue Denim has also incurred two types of selling costs. Commission equal to 10% of the sales price and a fixed selling expense of $120,000. So how the income statement works for a manufacturing firm, it does hold true that we have revenue minus expenses, as I said, but revenue has a different name. It is still a revenue account. It is a revenue account called sales, is where we start. So my sales number, it says I sold 99,000 pairs of jeans at a price of $8 each. So for my revenues, I can just take 99,000 times $8 each to get 792,000 is my sales revenue. After that, we do a two-step process in a manufacturing firm where rather than just listing all the expenses in one place, we take out first and foremost what we call the cost of goods sold. And they gave us this number here, but remember, back to this page, that number would ultimately come from whatever came out of our finished goods inventory. This subtraction number here from my finished goods inventory is really where that would come from. And in this case, they told us our cost of goods sold is $495,000. And that's a cost, like an expense, since it's been incurred. So I need to subtract those two numbers. And when I subtract those two numbers, the number I find by subtracting sales minus cost of goods sold is my gross profit. So this company has a gross profit of $297,000, but it does have some other expenses. So we have and we usually separate out our selling expenses and then our administrative expenses. Okay, so for selling expenses, it says that we have two types of selling expense. They have a 10% of the sales price and a fixed selling expense of $120,000. So I'm going to make room for the two. So commission, which is 10% of the sales price. So I can just hit equals sales price, the total sales price times 0.1. Obviously, you could also take 10% of $8 and multiply that by 99,000. There's more than one way to do this, whichever way makes more sense to you. So the commissions are $79,200. The fixed selling expense is $120,000 given in the problem. You don't have to put an equal sign. I just kind of do that out of habit. And then we have our administrative expenses. I'm going to separate that out just so we can see it a little easier. And it says we have a total administrative expense of $85,000. So I can total my SG and A. It's just short for selling, general, and administrative expenses. So I can total these three. 79.2 plus 120 plus 85 gives me 284. And to find my net income, remember it's revenue minus my expenses. So I've summed up all my expenses that my cost of goods sold I already took out. So I can take this 297 minus 284.2, get my net income or profit is another name for it, for $12,800 for this particular company. And I think that's where I'll stop on this one.